Sell in May, go away? Well, that might be the case this year. You know, last week we talked about the ranges, how tight they were, and how they were going to break in the markets. Well, they broke, and they broke big time. And we're going to talk about all of that and more on the week ahead video. My name is Blake Morrow with ForexAnalytix. I'm glad you're here. You know, it's not just going to be myself today. I've got two guests that are coming on this show. Grega Horvat, our Elliotician in the ForexAnalytix system. So if you look at Elliot Wave analysis, you'll get his analysis live in the markets. So make sure you stick around for that. Also, one of the other persons that I'm going to be bringing on is Nick from Trading Analytix. He comes on each and every week, but he talks about some of the major markets and what's happening there. So make sure you all stick around for our two special guests that are joining in today. You know, next week is going to be a fairly busy week, and I'm going to cover a few things. I don't want to repeat a bunch because, again, we're going to have a couple of guests here on this week ahead video. But I do want to talk about what's happening this next week. We have some pretty key earnings. We have NVDA, Salesforce.com, Dell, Marvell, Costco, and plenty of more other stocks, but some pretty important ones. Obviously, NVIDIA, we're going to take a look at that, and I know Nick's probably going to take a look at it as well. But I have something specific I want to show you about NVIDIA because everybody's bullish, but which rightfully so if you see the technical setup, but I can show you a technical setup that goes the other direction in case they disappoint the market. And I'm also going to talk about what's happening this next week, like all the events, and I want to cover some of the major currencies and everything else. So you can follow along right here on your calendar tab, and then after I do that, I'm gonna bring in Grega first, and then I'm going to talk about some other markets, and I'm going to bring in Nick. So, like I said, stick around for all of that. So let's talk about what's happening this next week, and I'm going to actually pull up our charts that we normally look at. Excuse me. I'm going to do this with the dollar, and this is our week ahead charts. I do want to talk about the dollar because the dollar is in full-fledged bear flag pattern mode. Now, something important is happening on Sunday, and it's before the markets open or right around when the markets open. FOMC Powell is speaking at Princeton at the baccalaureate ceremony in New Jersey. So is he going to say anything about monetary policy? Is he going to talk about, you know, where the Fed stands? I'm not really too sure, but even on Wednesday, we're going to get the FOMC meeting minutes. Now, the meeting minutes are going to be really important this week because I know we're hearing a lot from Fed governors right now. They're out on the speaking trail. There's a bunch of them even talking this next week. They're going to talk about how they feel about monetary policy, but it's important for us to feel the gauge on how these FOMC speakers, and especially the voting speakers, feel about monetary policy. As the Fed's stuck. We've talked a lot about this over the last couple of weeks in our live shows that with the Fed, they can't really lower rates, even though the economy seems like it might start slowing, or even if it does, they want to be careful about the inflation that they could pick up, because we feel inflationary pressures are already starting to pick up. So they can't really lower rates, but they can't really raise rates and slow down the economy to smash inflation. So they're kind of stuck in this weird environment where they have to stay steady. So anything that we get from the FOMC is probably going to lend us to some cues what we do with the dollar. But because the dollar, as you can see here, is in bearish breakdown territory. We're in a bear flag pattern, and just so you guys know the targets, the flag pattern points to 90, basically to 90 eventually. Now, if you think the dollar is going straight to 90 from where we're currently at, I doubt it. I mean, obviously, there's a couple of things that could happen that could propel the dollar lower. Either breakdown in trade negotiations between China, maybe bond vigilantes run amok and yields rally and the dollar sells off. People get scared about growth prospects. Maybe we go into a point where we start losing jobs pretty consistently over the next few months, and that drives the dollar down. I doubt we're going to go straight down, though, because we're going to find this like major long-term trend line that goes back from all the way to 2011. We're going to find some support there, But I do think that the trajectory of the dollar over the course of the next 6 months is going to be down. I just don't think it's going to be a straight move down. I think we'll go down and we're going to bounce and then bounce around and then finally break through, and then eventually by the end of the year we'll probably be down at 90. I think that's how the dollar is going to trade, but it's really hard to figure that out, especially with so many moving parts. As you guys know, that even today, as I'm filming on a Friday, on Friday, May 23rd, we just got some literally truth bombs, truth social bombs from President Trump about the EU, about Apple, and it's created a lot of volatility in the market. So, just always keep that in mind, that it's not going to be a straight shot, but overall, our bias is going to be bearish dollar for the weeks and months ahead, more than likely, based on the technical formations we see right now. But like I said, Powell's speaking on Sunday. And then one of the other things that we really got to pay attention to this week, and actually Grega Horvat will be here talking about yields, but I want to talk a little bit about not just yields, but I want to talk about like the longer end. Let's look at the 30-year. And what we're seeing in 30-year yields is they are getting extremely bullish. Look at this weekly chart, and I'm going to go all the way back, and this is a weekly chart. I'm going to go all the way back to September of 1990, and you can see we had this trend line that goes from September of 1990 to the highs back in 23, the highs back last year, and then we finally broke out this week, and we're trying to break out. Now, there's a lot of reasons why this is happening. Investors are increasingly becoming concerned about our debt deficit issues with the United States and us issuing more debt, with our budget that we're trying to push with the reconciliation bill, that increased spending where people are like, how is the Fed going to pay for this? Or how's the Fed going to make right on all this long-term debt? It's starting to increase what Chris Weston from Pepperstone calls the term premium, and that's why investors are demanding a higher yield to hold longer-term maturity debt. And so we have some important auctions this week. We have a 2-year on Tuesday, a 5-year, these are all note auctions, 5-year notes on Wednesday, and a 7-year note auction on Thursday. Now, our 20-year auction last week, or this week, excuse me, it's this week, last week as you're watching this, went poorly. And then also some Japanese GGB auctions went off poorly as well this week. So everybody's looking at global yields, and it is a big issue. So it's something that we need to pay attention to this week as we navigate through all the other landmines of things that are happening. Okay, what else is happening this week is we have Australian CPI and the RBNZ rate decision. Now, Grega does talk about the Kiwi dollar on from an Elliot Wave point of view in the upcoming video segment that you're going to see in a few minutes. But I want to tell you something about the Kiwi. Well, a couple of things. First of all, if you're utilizing ForexAnalytix, you can get Grega's analysis right here on ForexAnalytix. You just click Elliot Wave, and the Elliot Wave tabs of these 30 different instruments, you can view an updated Elliot Wave count each and every day. Now, people say, well, you guys are ForexAnalytix, you guys only cover currencies. That is not true at all whatsoever. You can see we have the German DAX, we have the 10-year yield, we have boons, or actually this is the 10-year notes, we have Ethereum, we have crypto, we have the S&P, we have gold, we have a lot of other instruments that are just not all currency related. Obviously the currency market as well. We have 30 different instruments that we cover. And by the way, if you haven't taken advantage of the Liberation offer, which is the cheapest monthly subscription that we've given in about 5 years, it comes out to $3 a day, which is less than $90 a month. Our normal prices are $150 a month. We backed up prices about 5 years to give you guys a break, to lock in these low prices. We haven't done this ever. we've just always raised our prices. We've done that because we know that these tariffs are going to create some inflation globally, and we're going to do our part. Now, we've been offering this liberation offer, and it's been a big success for us for the last few weeks, but we are about ready to remove it. So you got till the end of the month to take advantage of this offer. There's no better time than today to lock this in, because not only do you get into the ForexAnalytix community, you're also in our chat rooms. And if you want to know what we're thinking in the markets, you want to know exactly what I'm trading in the markets, and you want to talk to other traders about what's happening with everything that's happening in the market when these true social events come out, and then you're in the trades room and you want to know, oh, what position is Nick? He's taking off his short S&P positions today, or that, myself, I just closed out my pound US dollar longs and my euro US dollar longs earlier this session. If you want a running total of all I'm trading, well, you can come to the chat room, and that's inside of the ForexAnalytix community. So take advantage of the liberation offer when you can. And like I said, you're going to get all of Grega's analysis, his updated analysis. You'll notice he's looking for a Kiwi dollar breakout higher. He's going to talk about that in this video coming up in just a few minutes. Also, did I mention you get live squawk feed, which is a great help, especially when you get up in the morning to figure out everything that's happened in the markets that is going to influence you the night while you were sleeping. You can find it all here on the live squawk feed. It's amazing. All right. So I'm not going to talk about the Kiwi because I don't want to, take away from what Grega is going to show you. But I will tell you that the Aussie dollar is threatening an upside breakout. Now, you would think with stocks a little bit weaker, this shouldn't happen, but it is. And the fact of the matter is the Aussie is trying to break higher. And the thing is if we can get much above 65 cents, you're going to see a massive breakout to the upside. Now, we do have Australian CPI on Tuesday. And one of the other things that's happening this week, before I turn it over to Grega, is we have the US PCE. Well, we have PCE prices on Thursday. We have US PCE on Friday. We also have Canadian GDP. But you'll see that the euro dollar, we had been talking on and on and on about this for the last 2 weeks. I know a lot of you, and myself included, were long the euro from a couple of weeks ago when we dipped down to retest that multi-year, this teal trend line. Remember this, from 160 all the way down. We took advantage of that. We went long. It was one of the 3 trade setups 2 weeks ago, is to get long the euro dollar. Well, I know I did it, and I know a lot of you did it as well. Like I said, I was selling the euro today because we're up against this, underside of this broken channel. But that doesn't mean that the euro's done. The euro could actually break out to the upside, especially if we see PCE prices come down later this next week. So keep that in mind as you're, again, navigating around through these currencies around the dollar. Now, don't forget, at the end of this video, I cover the top 3 trades of the week, but I also review the 3 trades from last week. I do that every single week. So this way, there's some, you can see what I talked about. We can go over it. Sometimes they work, more times they work than they don't. And we can talk about what went right, what went wrong. That's what traders do. And then I'll give you 3 of the top trade setups for this week. So make sure you stick around for that. But without further ado, I'm going to bring in Grega Horvat. He's going to talk some Elliot Wave analysis. He's got some setups on yields, some currencies, and I think he even talks about the S&P a little bit. So, Grega, we'll see you soon. Enjoy your time with Grega.
Hello everyone, welcome to our new video here for the end of the week. It's been quite some time since I made a video for ForexAnalytix members, so I think now it's a perfect time. I also will be away next week. We'll leave for 7-8 days of vacation, so I want to bring you some attention to the charts that I'm tracking. So firstly, I want to look at treasuries. As you know, treasuries, I think, have this double bottom. It's a adjusted contract here, but still we can count 5 waves up from that low, followed by ABC pullback. Now this is quite significant, because if we will see a rebound here and the US yields will come to the downside, of course this means that US dollar can see more weakness if we consider that dollar index is already breaking out of this bear flag. So we basically see bearish pattern on dollar index, and if the US treasuries are now at the support, it means that the US yields will come to the downside, and in fact we could see more downside pressure on the dollar. In fact, if you take a look on this price chart of the 10-year US treasuries, we can see 5 waves down followed by ABC rally in wave B. So that was the case based on Elliot Wave patterns, 5 waves down, 3 wave rally for a wave B, and then we had these 5 waves that unfolded and completed wave C of a counter trend movement down here. So I would not be surprised if we see higher treasuries, lower US yields. Even if you look at some alternate scenario and think that US yields are trapped in a triangle, well, that's an ABCDE pattern, and we are still missing wave E here for a pullback close to 4%. So I think if the US yields based on these charts will really come to the downside, even if just temporary, dollar will most likely hit new lows of the year. Looking at the euro dollar, also we are breaking this trend line after ABC drop here. Very nice pullback for the 38.2%. That was basically the perfect fib level of an extended wave 3, which usually marks the end of a wave 4. Plus you have these 5 waves up, maybe as a leading diagonal. I can see some resistance here. It was a very overlapping nasty range here for most of April, and obviously this could be some resistance right now. So after retracement, I think that there will be more upside. Also Trump has announced that he is proposing 50% tariffs on the European Union starting June 1st, and it will be interesting to see how Europe will respond, but definitely this can cause some shaky price action in the near term, and maybe that's why we'll see some and should be aware of some retracement here. Looking at Kiwi, I think this one has a very beautiful price action. We have made a very nice push to the downside here in April. We retested, break the previous lows before we have seen a massive reversal, and now it's a period of consolidation. So sharp move down, sharp move up, now the period of consolidation. And what can happen after a consolidation is completed? Well, that we can see another move in the same direction of the previous impulse, which I believe was this lag. So I think that's a wave 2 or wave B pullback, and once this upper side of this corrective channel is broken, maybe around 0.6 level, it's also psychological level. If we see a daily close above that level, I think that we should be aware of more upside here. But even if we start breaking these supports, I still think that massive supports are a little bit lower, and that's still an uptrend or pose with an uptrend as long as the market is holding here above these April lows. Looking at gold, I think that this is very important. Of course, if Trump is imposing some new tariffs, this again will cause a lot of uncertainty. We can see already stocks coming to the downside, and in times of uncertainty, investors are looking for safe havens. And looking at gold, I'm not surprised by this bounce. We can see a very nice recovery, clearly impulsive price action away from the previous highs, which acted as a support here. And since we can count 5 waves up within this lag, I just think that after a pullback we will see more upside. So maybe there will be even more safe haven flows in the near term, and maybe that's not a surprise if we consider that the S&P 500 is coming down from the 78.6% fib retracement and also breaking out of this upward channel. So this makes me think that we will see more downside pressure. Keep in mind that we have some unfilled gaps here on the downside, so definitely these gaps could be very nice support whenever they are filled. So for now, as long as we are above these gaps, I'm quite unsure about the bullish presentation here. That's why I have this triangle as my primary count. It's an ABCDE pattern. Still, it will be a range that will stay in play for some time, but eventually, maybe during summer, we could see a push to the upside when maybe those negotiations, trade deals will finally be done and on the table. So until then, just be aware that this range could last a bit longer. But overall, it's very important that we that you understand that we are still tracking this ABCD pattern as part of an uptrend, and I think that this uptrend is very healthy or still alive as long as we are holding here above this trend line that marked the bottom here in April. Also, maybe it's interesting to look at Apple. I'm not looking at single stocks a lot, or show you on our website, but still seeing some very beautiful development. We have here ABC retracement with 5 waves down in wave C, plus that was a very nice rebound, and now we can see some period of consolidation, and this consolidation and the current gap to the downside occurred because Trump has said that they are looking to post 25% tariffs on all of the products from Apple that are, or phones that are sold in the United States but are produced out of the United States, right? Still, what is very important to understand that this will reduce any new costs, and inflation will be, of course, paid at the end by consumer, and consumers will still be buying phones even if they are already expensive today. So I still think that this, despite such a big news, it's not really big gap to the downside. I'm still seeing a very nice and beautiful support here around 190. Possibly this could be a wave B, maybe even a wave 2. But what is interesting that we filled a few gaps here, and still we have some unfilled big gap at the high. So I think that this could be very attractive, very interesting, as long as these levels up here, as long as the market trades above that lows. Finally, let's take a look on Bitcoin. Bitcoin is trading at all-time highs. We have been looking for a push to new all-time high for a wave 5. Now there will be a lot of optimism going on very soon, some crazy targets, and that's the perfect timing where you should be aware of the opposite. Keep in mind that we have 5 waves up here, and these 5 waves up suggest that we could be in the late stages of a wave 5. It doesn't mean that this market should stop here. We could see just some kind of a slow temporary pullback and then even more upside. Just keep in mind that you are in a wave 5 and that sooner or later we could see some retracement. They may not be just an easy break through these very big levels, because we always, when we moved closer to these highs, there were some retracement, even if just short term. So just keep in mind that maybe there will be some interest in transfers from Bitcoin into some other altcoins that could be much more interesting, especially when it comes to price action itself. Traders, thank you very much for watching this video, and talk to you next time. Bye.
And I know Grega said he's going on a holiday, but don't worry, your charts are still going to get uploaded every single day with the Elliot Wave analysis, just because Grega and his staff, he updates these even if he's out on holiday. He still has all of his charts updated here at ForexAnalytix. So don't think you're going to miss out. All right, I'm going to cover just a couple of things before I bring in Nick from Trading Analytics. I do want to talk about some of these stocks that are reporting earnings, and I know Nick's going to talk about the S&P. He's going to talk about some of the other indices. I do want to mention the S&P. Well, actually, you know what? I'm not going to, because we will talk about it on the trade setups from last week. So I will have to cover the S&P as a whole. But I do want to talk about gold, because gold, this is a really interesting chart here, and you know, people want to find the top in gold. That's like everybody's, you know, when you get an asset class like gold that's just been in a runaway market, everybody wants to find the top. And we had a guest, or Dale had a guest on this week, Carly Gardner, and she does some work with Jim Cramer on, you know, CNBC and stuff, and so, you know, a lot of people know who she is. She was saying that gold was in a blow off top, and then I got a lot of questions about that in our chat room after her interview. And I'm going to tell you this: is it a blow off top? In my opinion, the answer to that question is no. A blow off top is when there's a capitulation. Have we seen a capitulation to the upside yet? The answer to that question for me is no. And capitulation is usually when you rally, like, you know, several percentage points. When I'm talking several, I'm talking 4, 5, 10% in one day, and then you give it all back the same day. I've been through a lot of capitulation blow off tops, or V bottom capitulation lows, over my 20, almost 30 years of experience since 1995 when I first got my Series 7 license. And I'll tell you, gold does not look like a blow off top to me. Is it in process of blowing off a top? I think so. And if you look at this and you look at this chart pattern in gold, in my opinion, we broke the 618, we rallied. And as you can see, gold is trying to break back out to the upside, and we could call it a flag, you can call it a channel, whatever you want to call it. All we've been in is a tight multi-week consolidation at the all-time highs. When you're at a consolidation at the all-time highs, that's typically not a bearish event. Okay, so is there room for gold to continue to rally? I think so. And you know what? The market is extremely concerned. We've seen it in our auctions globally, not just the US, but people are concerned with the debt to GDP ratios of the G7 countries and the European Union and the United States and Japan and the UK, you name it. If you're concerned, and if you're an investor and you're a global investor and you're concerned, you're going to buy gold. And that's why I don't think gold has backed off. I don't think we've seen the end of this concern of what is happening on a fiscal front and a debt front on a global basis, which could give us just fodder for a future rally in gold. That doesn't mean I want to necessarily get long, but I wouldn't want to be on the short side. And I think while gold is above 3,100 or this breakout point, which is 3,160, we did a false breakdown below that. While you're above it, I don't think being on the short side makes sense. Now, maybe there is something that happens that actually turns the market lower, but don't worry. If you're listening every day to our face show, now, if you don't know how to get to our free shows that we do every day, just go to our website, go to where it says webinars right here. We have 2 shows that are free for any one of you to attend. We have the Flow Show right here. It's our European show. We have Ryan Littlestone and K-Man who host that show. I'm usually sleeping, so when I get up in the morning, I listen to the recording immediately so I can get ready for my trading day, which then we broadcast the Face Show. The Face Show is hosted by the one and only Dale Pinkert every single day. Then you get live analysis from myself, Ryan, K-Man, Steve, Stelios, Nick pops in, Grega jumps in there sometimes, and then Dale brings on guests every single day from all over the world to talk to you guys and give you analysis each and every day for 8 years straight. So listen to these free shows, because at some point gold will turn lower. And when gold turns lower, we'll know the reasons why. So if you want to be informed, make sure you check out those shows. All right, now I'm going to bring on Nick here to talk about the indices. And like I said, I believe he's going to talk about NVIDIA. When we come back after Nick, I am going to talk about some of the stocks that are reporting, like NVIDIA. I want to cover Costco as well. And then I'm going to talk about the 3 top setups for this week, but review last week's as well. So enjoy your time with Nick. Here he is.
Hello everybody, my name is Nick Gross with Trading Analytics. Blake, thank you as always for passing on over to me. And now I'm going to dive into a little bit of the equity market. So finally saw some weakness and some mean reversion. And I think the big question over the coming weeks is, at what point do you maybe want to buy this slight correction? Because it's relatively minor at the moment. I wouldn't say it's broken anything too significant yet, but we've had a classic reversal pattern print out, that being the rising wedge here. And you might have seen that online quite a bit. I would also encourage you to potentially, stretch this out to the lows of April instead of the April 21st low. And also notice that, hey, either way you slice it, it's a nice rising wedge. And you had a solid back test of there too, in an area where we highlighted some resistance in here Wednesday and Thursday this past week. And Blake and I talk on the daily roundup throughout the week that shows, that airs at 12:30 Eastern. And we were talking about, hey, this is a nice setup here in this rising wedge. Your risk is well defined. We've stretched up quite far, and you know your risk. If you got in earlier, after Monday, your risk is the highs of Monday. And the potential is on the risk reward to come down and fill this gap down here. This gap hasn't entirely filled yet, but that was really the target that I was talking about. And you'll notice, as we all communicate, we all generate ideas. I noticed Lucas in our chat room had a really nice trade after the daily roundup, shorting the S&P. Made some good money on that, and I love Lucas's commentary throughout the week as well. It's a great community. I can't recommend it anymore. I've been a part of it for years. Now, moving back to some more analysis, right? I would say, I know we're bouncing right now. What I'm looking for is a stall around 58.30. I would like to see, let's see here, this level hold. This comes in at 58.32. I think that this level needs to hold in order for bears to remain control. You get back above here, it starts to get a little bit more dicey, and I'm not too sure if it will actually get up there. It could stall out from here. Now, a big development that occurred today that was lacking the whole week was the lack of the NASDAQ breaking down. Okay, we've seen a ton of moves higher, sideways, moves higher, sideways, move higher, sideways. It's finally broken down. You'll notice that the Dow was selling off earlier in the week, and it was starting to drag the S&P down, but the NASDAQ was keeping us afloat. And now that this is broken down, it needs to hold the breakdown around 21, call it 21,100. Okay, I believe that this level needs to hold to continue the bear trend south in equities. If you get back above, that's where things can begin to get risky. Overall, support and resistance, you definitely have resistance up at the 59.75. I also think 58.30 is key resistance at the moment. I'm sure 5900 will offer some as well. But to the downside, where could we eventually go? Now, I'm looking for this gap fill first and foremost. 57.25, that's what I want to see. After then is where it gets a little bit more tricky. When you have a nice formation like this rising wedge, the 38.2 is a pretty common target. That comes in around 55.40. You'll notice I have a buy zone in here in between 55.75 and 56.30. I think somewhere around there you could find some support in the event we roll over the next week or so. And the big question will be, is it time to buy then? Because I've been talking a lot about, I don't think that this tariff war is over. And, there's a risk that things between the U.S. and China heat up again. I mean, we just saw Trump today talking about, if Apple isn't creating more iPhones in the U.S., there will be a 25% tariff on Apple. And I'll be diving into that chart here momentarily. But once we get down here, depending on the narratives, I will be making a decision to either buy or short the equities at that level. Now, if we just simply start moving higher, I will get out of my shorts and move on, right? And I do tend to post the trades that I take here in the chat room. The chat room is great, but it's not just equities. I talk Forex as well. But I try to leave that up to Blake on the week ahead. But there's great analysis in here from K-Man, Ryan, Lucas, Blake, Kyle, Michael. I mean, everybody's putting in their work. And really, when I wake up in the morning, like in a morning like today, where the market's down a bunch, the first thing I do is I go in and I say, what's everyone trading? Are they peeling out of dollars? Are they adding to their dollars? And now that I'm so familiar with all of them, I tend to see how they're thinking. I might not trade the exact same time frames as K-Man, but what K-Man is doing intraday tells me something about how I want to be positioned. And it's a community that I'm so grateful for. Moving along. Now, I talked about the NASDAQ and how the NASDAQ's really held the market up this week prior to breaking down today. If you took a look at the RSP, what you'll notice, and this is the equal-weighted S&P, so it gets rid of all that Mag 7 weighting. You'll notice that we did stall at the 786 in the RSP, and it also already filled the gap. So what are those tech stocks that were holding us up this past week doing today? Well, the big ones holding us up were Google and Tesla. I'll start with Tesla. Now, if you're a bear, this is your risk. There's a bull flag in Tesla. If Tesla breaks above 352, I think there's a decent chance we get up to 385, if not 400. This stock has been running higher, trading sideways. It could go on another leg up, and that's your risk. You don't want to see NASDAQ get back in that range if you're a bear like myself who's short at the moment. I was long all of April, so I recently switched short. Now, this one has been holding us up. Another one is Google. Now, Google is not so favorable. Look at this look at this wick here. That's a great candlestone reversal. Candlestick. I was thinking gravestone there. But another nice few touches on top of this candle here on the daily is that you have resistance that dates back to 2023. And why this resistance is important, because you have a couple tags on it and you have a back test. So tag, bounce, back test, breakdown. And now that former support is now resistance. You'll also notice that it came up to the 50% retracement, and to sprinkle a little bit of extra on it, you're in a bear flag. So I really like this setup here. We were talking about it on the daily roundup as we were breaching around here, that if you could get back down, that's triple confluence. I think it's a grade A setup, and we'll just have to see how it plays out. The big one, the next few sessions will be one, Apple. Now, I just want to point out on Apple, Apple has not gone anywhere really since mid-April. Okay, while the rest of the market has been stretching higher, Apple has remained in this range. And I think its ties to China has something to do with it. Could this end up being the canary in the coal mine type of stock that we need to be watching? I certainly think it probably will be. Now, you need to see 190 break in Apple first. Let me go ahead and give a little bit more intraday fib. You need to see this 50% retracement break in Apple. I would call it 190 is what needs to break. And then ultimately the lows around 174, 170, get down there and break them. But to start, 190 needs to break to the upside. If you break 215, that would infer, another leg higher in equities. Maybe we go back to all-time highs. You need to be paying attention to Apple, in my opinion. And another one that you need to be paying attention to is NVIDIA, because we have NVIDIA earnings next week. That is going to be on Wednesday, the 28th. The reason why NVIDIA is so important is because it has been the poster child of this bull run the last few years. Now, it hasn't gotten back up to the 786 like the S&P has or the NASDAQ has. They're actually gotten above them at one point. And we're going to have to see if this can pull back. I do feel as if, 140 is key resistance in NVIDIA. But in the event we get a pullback, a deeper pullback, like what we're apparently seemingly getting in the equity market, is where does it end? It would need to hold this breakout here at the 38.2 at 118. Okay, that level needs to hold NVIDIA. I will be updating you guys on the implied volatility of this move when I get it, but I wouldn't be surprised if it's plus or minus 8%. So depending on where this goes after earnings, you could have a very decent idea of where the overall market might be going because of how important semiconductors are. If you're looking for more analysis, check us out at Trading Analytix. Please give us a follow. And with that, I'm going to pass it on back to Blake. Thank you all so much. Have a great weekend. Cheers.
Nick, thank you very much. I haven't had a chance to review Nick's video as he's usually filming around the same time that I'm filming on a Friday afternoon, but I'm sure it's awesome because I watch it after the fact. But like I said, I don't want to cross over a bunch of things, but I promised you I would talk about NVIDIA. But before I talk about NVIDIA, I actually want to talk about Costco too. Like I said, there's some big earnings this next week. But NVIDIA is a big one, but Costco is another big one because Costco's been on this epic run. But you'll notice that Costco is trying to carve out a lower high, and that's what's really important about not only what's happening in Costco, but what's happening in like the S&P and other markets. Now, usually when you have situations like this that are kind of a sideways at the highs, I start really scoping out distribution patterns. And one of the distribution patterns that I like to talk about is I like to look at like a Wyckoff type of pattern, and that's very similar to what we're seeing here. Is we've seen that the initial buying climax, now you're in this consolidation. This might be the failed rally attempt that is a slightly lower high. So if Costco misses earnings or the stock is sold after the earnings and we start pushing back below the 200 DMA, my opinion is a Wyckoff long-term distribution top is being forged with Costco. Now, Costco is not the only chart that I'm really concerned with, because the one that's really the driver right now of the markets is NVIDIA. Now, if you look at NVIDIA, a very similar type of Wyckoff type of pattern developing as well. But I can't ignore that we have a bull flag pattern. You can't ignore that. And when you're talking about NVIDIA, you know, Jensen always knows the right words to say to appease the market and really get the market excited. And I don't think AI is going anywhere, and I think it's just going to be bigger and bigger as we move forward. So when you look at a bull flag pattern, there is a risk that we can break out to new highs. However, I'm going to remove that really quick, because how about if NVIDIA actually goes down? Well, that's when I want to take you out to a weekly chart, and I want to just let you all know that we are forging, in my opinion, on a weekly chart, a long-term potential head and shoulder pattern. Now, if Jensen fails to impress the market and we see a move lower following earnings, there is a uptick in risk in NVIDIA that we're creating a long-term head and shoulders top. That means we'd eventually break through 86. Now, I'm not there yet. I'm not in that camp just yet, but that's something that definitely is on the radar, especially if we see the stock unimpressed with NVIDIA's earnings. Now, NVIDIA is reporting on Thursday. They report on Thursday. Same with Salesforce.com. Dell and Marvell are on Thursday, and then Costco, I believe, is Friday morning. So a lot of earnings still to go this week, and some pretty important ones. All right, this is the point in the video that I'm going to talk about our top 3 trade setups for the week, but also talk about our 3 trade setups, or review the 3 trade setups from last week. But before I do that, I do want to mention that if you guys are looking to get some funding, check out the Trader Funding Program. We're in the spring into summer sales event that ends this week. It ends this weekend. This weekend. Didn't, like, literally in less than 24 hours if you're watching this on a Sunday. All right. We are giving 25% off our one-step assessments and 15% off. 15%. We've never done that on our instant funding program. So if you want to get funded as a trader, you can go into the immediate funding, you can go into one step, but let me just tell you, on the one-step assessment, we do things really simple, because you can access up to $1 million in capital and keep up to 90% of your returns by just passing a simple assessment. When I say it's simple, you don't have to jump through a bunch of hoops, not like all these other companies. You don't have to do this phase and that phase and then jump through this finally to get some money. No, you just have to make 10% without losing more than 6% on a trailing drawdown basis, and an intraday you can't lose more than 5%, because that means you can't control your risk if you do. It's pretty simple rules, and you have unlimited time. Plus, you get, with whatever funding program you use, you are involved in the ForexAnalytix community for a certain period of time, depending on, you know, the amount you take or what funding program you do. How great is that? Because then you can be in the chat room. You can say, oh, Blake had just bought this. Oh, Blake or K-Man had sold silver. Or no, that was gold. Sorry. Giannis is buying the euro sterling. Or Gene says, just sold the dollar yen and New Zealand yen. You know, these are traders, and you can look at what they're doing, get a feeling for what everybody's doing, stay up to breast of everything that's happening in the general chat room, know when news happens, how it's going to influence the market. And at the same time, you get the ForexAnalytix system, where you have analysis and you have a mobile app and you have all of this at your fingertips, and you have streaming news and patterns in play. So you can know that, oh, Blake was buying the pound dollar earlier this morning when it was below 135. All of that is available to you in the Trader Funding Program, or if you just decide to skip all of that and you just want a month-to-month subscription with ForexAnalytix, you can do that too. All right, with all that being said, let's get into the top 3 trade setups, or let's review the 3 setups from last week. And by the way, if you think these videos are super beneficial to you, make sure you give me a thumbs up, give the team a thumbs up, subscribe to the channel, do all that fun stuff. You know, comment down below. That helps the algorithms. You comment down below and say, hey, Blake, you forgot this. You know, and I'll say thank you. And that helps the YouTube algorithms, helps the cause. Anything helps. And what really helps too is if you see us on social media, like you see me tweet the week ahead video, could you please retweet it? I'd appreciate it, and so would our team. All right, enough of that. Trade setup number 1 from last week. Let's review. Number 1, short S&P on the ascending wedge on a break below the trend line. Well, that worked. If you shorted the S&P right here at 5,900 and it's currently trading at 58.16, you did pretty well. Now, we did find some support on the 200 DMA today, but ultimately I think we're going below that. And so we should actually start looking at how far we could actually go. If you take this low right here to the high that we hit this week, the 24% retracements at 57.05. The 38% retracement is 55.30. So does it seem like we can get down to the 50 DMA and down to that 38% retracement at minimum? It sure does, especially coming out of an ascending wedge. So trade number 1, that worked really well. All right, trade setup number 2. Now this one didn't, unfortunately. The notes say buy the euro dollar at 111 if possible. Well, I was long the euro dollar all week, and if you want to go through the trades room and go, oh, where was Blake long the euro, and how many times was he long the euro, all you got to do is keep scrolling up and you'll see exactly, the date, time, everything that I was getting in. You can even go back and look at your charts and go, oh, Blake got in right here. Oh crap, the euro was out 111.54 or whatever it was. Yeah, you can go ahead and just look at all that stuff. Unfortunately, we didn't dip to 111. It just went straight up. That's because, after the Moody's downgrade, the dollar just sold off and it didn't stop. So unfortunately, trade setup number 2 didn't come to fruition. Did it work? The direction work? Of course it did. But I was hoping we would get a dip to 111. And I even said in quotes, if possible. Unfortunately, it didn't dip to 111. So first trade setup worked great. Second trade setup, it didn't come to fruition. So it didn't not work. It just didn't come to fruition. And a lot of times we do that. We plan our trades and we hope they happen. And sometimes they don't. Okay, so the next and third and final trade, we talked about Bitcoin. And I said, I don't know if Bitcoin is a pennant or it's a bearish shark. And I said, buy it above 106,000 or short it below 100,000. Well, it broke above 106,000 and it went as high as all-time highs. It went as high as 112, I think, 112,000, and still it's at 110. So if you bought it at 106,000, because I said buy it above 106,000 because then it's a pennant, or you short it below 100,000 because then it'd be a shark. Well, if you bought it at 106,000 and you're still holding it, that's good. You're $4,000 or basically 3.5%. Not bad for half a week's work or a week's work. All right, so 2 trade setups worked. The other one just didn't come to fruition. So 2 out of 3, or you could say 2 out of 2, really worked. That's a good week. If you guys like that week, please jump down below and give me a thumbs up, and give the team a thumbs up, and say I like these videos. That's awesome, because that would help us out. Make sure you subscribe to the channel. All right. So what are the 3 setups for this week? Oops. This says get long. I don't know if I want to get long on a Friday. All right, so skip that. All right, so trade setup number 1, long pound dollar while above 134.40. So basically what I'm telling you right now is this pound dollar is breaking out. And if you notice, this is a bull flag pattern. We talked about it last week, and it'll target 139 on this rally. So buy pound dollar as long as it stays above 134.40. Trade setup number 1. And by the way, I'm already long, and I am kind of tooting my own or talking my own book. But if you were a ForexAnalytix subscriber 3 hours ago, you would have known that. And you would have been buying while it was below 135. It's one of the benefits of being a ForexAnalytix subscriber. Okay, so Trade setup number 2. Long S&P at 5,500 with a tight stop. So you guys know I'm bearish the S&P right now. I am expecting a move down to the 38% retracement. And if we see that, this should give you an opportunity to be on the long side with a very tight stop. See, everything that we do is all about risk reward. So, I mean, if we get to 5,500 and you could put in a 50 pip stop and you're looking for a 50 pip stop, but a 300 pip bounce back to 5,800, you're basically risking $1 to make 6. I would take those odds any day of the week. And hopefully that trade setup comes to fruition and we see 5,500 and maybe we do get a bounce. And if you're wrong, well, you risked $1. I mean, that's part of trading. You're going to take losses. But if I'm risking $1 to make 6, I would do it. So S&P gets to 5,500. I am looking for longs with a very tight stop. Trade setup number 3, the VIX. Now, some of you trade VIX certain ways. I think volatility is going to pick up. If you remember the title to this video, what was the title? Sell in May and go away. And what that means is basically if you're an asset manager and you sell in May and you come back in October after the summer holidays, typically the markets will be lower than they are in May. That has been a strategy for asset managers for many, many years. And I think this year it fits the bill. Reconciliation bill, excuse the pun. But it fits the bill because of all of the risks associated with the trade war that's ongoing. A sporadic or erratic, Trump administration, that is really unnerving the market. Between that and, markets have gone very far over the last several years, you are going to get some profit taking, in my opinion. So what comes with sell in May, go away? Well, downside in stocks and a higher volatility. So as long as volatility is below 24, that's right here, guys. Let me just make sure you know where that's at. While we're below 24, I think you can be looking for upside in volatility. I think volatility will eventually get over 30 once again over the next couple of weeks. So will it be higher by next week? Possibly, but I think it's going to be higher over the next couple of weeks. So buying VIX calls while below 24 is the way I'm going to do it. But again, you guys might be trading some other VIX derivatives like an ETF or something like that, or triple inverse Lindy. I'm joking, that's diving, it's not it, but you guys get what I'm saying. There's different ways you can skin that cat, that's for sure. So guys, it is a long weekend and it's a Memorial Day weekend in the US. Therefore, we will not have any of our live broadcast shows on Monday, because here in the United States, we are remembering all of our fallen heroes that have stood up for democracy and freedom in the United States. We are going to be remembering them on Memorial Day. So we observe them this Monday. And I know if you're in the UK, you have a UK bank holiday. So if you don't live in the US, you don't live in the UK, just enjoy hopefully kind of a quiet day in the FX market. But don't worry, Tuesday through Friday should be absolutely bonkers, and I'm going to be with you every step of the way. So make sure you jump into the Face Show on Tuesday morning. I'll see you guys there. My name is Blake Morrow. You've been listening to the Week Ahead video. Thank you so much for spending your time with me, and enjoy the long holiday weekend. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.